So we've had a decent pullback now off of these two lines that I have here on my charts, and both of these lines are key dark pool sells that we've seen from the past week. And what's interesting is these ended up being the high point before having a sell-off from here. Additionally, on top of that, if you look at the historical flow here on Cheddar Flow for SPY, you can see that a $14.8 million in premium out the money put for the 421 expiration was taken at 416 as the spot price. If you look back here at SPY's chart, 416 is roughly this top area that we've also topped out at. So first of all, there's two huge dark pool prints, both 3 billion plus in terms of signature dark pool prints, that is. And then on top of that, we also saw a very rare 14 million plus out the money put order at this 416 level as well. Both of these are very uncommon to see. It's not as common to see these 3 billion plus prints. We haven't seen them in quite a bit now. And then on top of that, we also saw a very rare put print. This isn't just your typical $1, $2, or $3 million out the money print. This is a $14 million print. Also, this one was above the ask, as you can see here in order details. So that's three unusual order flow / dark pool related things that were happening up here. And this has marked the high so far. So this range between 415.20 and roughly 416.70 is very critical as we go into CPI week. Remember, CPI is on Tuesday. It tends to bring a lot of volatility with it. We've seen some pretty crazy days. Just go back all the way to October 13th. This was an insane day where we had a major reversal to the upside off of that. So we've seen a lot of volatility on these days. And also funny with that, there was a lot of revisions that happened to previous CPI reports from this week, which is another controversy in itself. Some of these prints from previous months like January and December were actually not correct, and they were revised as of this week to the correct level, which means that basically we got fake data from before, which is a whole other issue, but I'm not going to go into that today. Just going to talk about technicals and order flow. But basically what you can gather from this is if you are bullish and want to see continuation to this rally we've been seeing now for the past couple weeks, you need to see a break above these levels. This 415 to 416 mid range needs to get above this if it wants to have continuation upward, and that includes this week for CPI, because as of now we are below it and there's a lot of sell pressure up here. I referenced a large whale selling a lot through signature dark pool prints on Wednesday in our Wednesday video, which if you don't watch our videos or you're new here, you can subscribe below. We do these every Sunday and Wednesday, and you do need to see a break above this distribution zone because it's acting as a hard resistance right now, on top of the fact that we saw this large put order up there. So a lot of these things converged right around this area up here, and if you are a bull, you just want to see it get back above, because as of now it's showing a lot of weakness from up here, so just keep this in mind for this week. Additionally, for SPX this week, keep in mind these ascending wedge patterns. Right now we have broken below this ascending wedge pattern, very similar to the one we saw back here. Also, this is a rough sketch of previous ascending wedges that we've had. All of these have led to the same thing. All of these have been bear market rallies, which is my thesis as of now, that this is just a bear market rally, and we will see the start of a rollover here fairly soon. And back here, as you can see, this isn't the perfect ascending wedge, kind of like we've seen here with these two in yellow, but still it applies the same exact principle. We had a breakout over here, which ended up being a fake out, and then we rolled over and continued downward. Same thing over here. We had a breakout for 2 days, got rejected off of this yellow line, which is the one that goes to the all-time high up here, and this is basically the downward trend line of this entire bear market structure. Got rejected off of that, fell down, retested, and then fell down again. And then up here we had a fake out yet again up here, as you can see, for this 1 day, fell down, retested the top of it, and now we fell back under. So even if, let's say, CPI prompted a little bit of a cooler print, cooler than expected on the street, it still could have an upward move that retests this ascending wedge, kind of like what we saw back here on the 13th of December. We actually went back into the wedge to open up the day, got rejected to the tick of this yellow trend line, the top of the ascending wedge, as you can see up here, and then got rejected hard and fell back down. A lot of these could be similar options where even if it gaps up for the day, there's potential that it falls back down, which if it gapped up to retest it, similar to what we saw back here, that also converges, as you can see over here, with this 415 to 416 range. This is the heavy dark pool distribution level that we've been monitoring and sharing with you guys, as I shared earlier in the video here. So a lot of sell pressure up here. Again, bulls do want to get above this range as it converges with SPX's own ascending wedge. They need to get back above this if they want continuation upward, because as of now, there's more weakness for the market as long as we stay under this. Yes, we still are above the downward trend line, the one I just referenced here from all-time highs. However, still, the fact that we broke below this ascending wedge is the start for at least a retest of this downward trend line here in the next couple weeks, because it's showing signs of weakness right now. And also in terms of just whale positioning that we've seen, what I showed you with the put order over here for the 395 strike, which also, by the way, 395 strike, if you go back here, look at this, 395 is right around the retest of this gray trend line, which is the all-time high trend line as well on SPY, the one I just showed you on SPX. It seems to be the consensus that there's a lot more weakness up here, a lot more sell pressure, and the expectation that we will get at the very least a retest of this line here within the next couple weeks or so. So just keep that in mind going forward. Also, I've made comments about this roughly 17 to 19-ish zone on the VIX. Every time it's touched so far in the past year, it has prompted a bounce all the way to 32 plus at the very least each time, as you can see with all these spikes throughout the past year thus far. And then also from down here, every time we've touched it, like I just said, it has bounced from there. So we did touch it yet again in this past month of January as well as early February, and now we're starting to see a spike back above, which brings me to my other chart over here, which we had a very critical retest of this yellow trend line right here. This starts at the November 4th pivot from back here. There's two key trend lines that start here. One is the top one over here, and then the other one is the one that I'm referencing right now. We had a hard rejection here on Friday off of this one. However, this is the second time it's been rejected off this level. I do expect it, especially within the next week or so, to end up getting back above, which would warrant an upside move. It doesn't have to be immediate, but would warrant an upside move, at least for the trend to this next trend line here that's acted as a resistance as well as support, as you can see back here in the past. So these are two key trend lines to mark on your own charts. Both of these start with the November 4th pivot. You could drag them across to previous support levels / resistances to derive kind of where they are right now. But keep this one in mind because this is a pretty thick resistance that, if it's able to break, will warrant a lot more volatility here in the market. Also, on top of that, some of these big caps are seeing more excessive weakness, especially coming off of earnings that seemingly were bullish just based on price action alone. If you actually read and looked through the earnings reports and also the earnings conference calls, which ended up being the more bearish form of earnings here, a lot of the conference calls were not the best for these companies, yet we did still see short squeezes the day following, or the days, like a couple days after that. Meta had a pretty big upward move for 23% here on February 2nd after their earnings, but now it's starting to see a little bit of a rundown here. One key thing to note if you look over at this chart for Meta is we do have a major support level here between the 169 to 171-ish range. This goes back to a very critical pivot from over here on the 27th of December / 31st of December of 2018. You can see it drags across to the 2020 low over here. Also ended up being a zone of a lot of consolidation here in 2022, and now it's likely to retest it. So this could be a bounce zone for Meta, but still a lot of these big caps have been rolling over lately. We saw Microsoft, two very bearish red days, Thursday and Friday, pretty large seller up here, a lot of sell pressure that is. Same exact thing with Google and their AI issues, and then also on top of that, Bitcoin as well has fallen down, and speculative assets such as Bitcoin and think your growth tech stocks from the past year that were down like 80-85%. A lot of these have seen big relief bounces and short covering rallies in the past couple weeks so far, and that has led to the continuation of the overall market rally. We've seen NASDAQ start to pick up a bid quite a bit. Because remember, the first rally that we saw on SPX and just SPY in general was mostly led by dollar weakness. The Dow Jones was seeing a lot of strength, just a little bit more so relief bounce in the general market. Now we're seeing a big relief bounce in those beaten down tech stocks and speculative assets along with it, such as Bitcoin. However, we saw a lot of distribution up here in this mid 20,000 range, and then it fell down off of it. So as of now, it is showing more weakness to the downside after having a large short squeeze rally, and this could be a sign or indicator of potential weakness in that growth tech stock kind of sector, which would also have an impact on the NASDAQ, which on top of that would have an impact on the overall market. Anyways, we have a very exciting week ahead. Not only is there CPI on Tuesday, but also OPEX is on Friday, so expect a lot of volatility. Make sure you have correct risk mitigation in place for your trades, and looking forward to all the excitement for this week. And I'll see you guys next time on Wednesday.